So, you're thinking about investing, but when you start looking into it, it just feels overwhelming, right? Analyzing a company can seem like you're trying to decode a secret language. But what if I told you it's actually a pretty straightforward three-step process? Well, today, we're going to break it all down and demystify it together.
At the end of the day, it all comes down to this one huge question. What actually makes a company a good company to invest in? Let's be honest, it's not about getting a hot stock tip from a friend or chasing the latest rumor. No, it's about becoming a bit of a detective and learning how to spot the clues that tell you about a company's real health, its unique strengths, and where it's headed.
And of course, every detective needs a case to crack. So for our walkthrough today, we're going to be looking at Mitsui Co., which is a massive trading and investment company based in Japan. And to be super clear, we're not here to tell you whether you should or shouldn't invest. Not at all. We're just using their real public information to show you how you can do this kind of investigation for yourself.
All right, so where does any investigation start? With the facts. And for a company, the facts are in the numbers. The best way to think about this is like looking at a company's report card. It tells you in plain black and white how they've been doing. It's all about the cold, hard data.
Now, you could look at a million different numbers, but to get started, we're going to focus on just two key things from Mitsui's latest financial report. First up is revenue. You can think of this as the total amount of money the company brought in from all its sales, a whopping 14.6 trillion yen. But the number we really want to zoom in on is net income. That's the profit. That's what's actually left over after they've paid all the bills.
And for Mitsui, that number is over 900 billion yen. So what's the big deal? Well, this is their actual take-home profit for the year. It's a huge, positive number, and that's the very first clue we're looking for as a detective. It tells us, yep, this business is making money, but just being profitable isn't the whole story. We also need to ask, how efficiently are they making that money?
And that question leads us to a really important metric called ROE, or return on equity. I know it sounds super technical, but the idea is actually simple. It basically asks for every dollar that investors, the shareholders, have put into the company, how much profit is the company spitting back out? A higher ROE means they're better at turning investors' money into more money. As a general rule of thumb, a lot of investors see a consistent ROE of 15% or more as a sign of a really solid business.
Okay, so step one is done. The report card looks pretty good. But let's be real, numbers don't tell you the whole story. They tell you what happened, but they don't tell you why. So for step two, we have to dig deeper. What does this company actually do to bring in all that cash? It's time to understand the business itself.
So first up, we find out that Mitsui is an absolute giant in mineral and metal resources. We're talking about huge iron ore operations in Australia, massive copper projects in South America. This is the heavy-duty foundational stuff that literally builds the world around us.
But here's where it gets interesting. They don't stop there. They are also a major player in machinery and infrastructure. And this covers a ton of ground. Everything from building massive power plants to developing new renewable energy projects, all the way to owning and running the giant ships that carry goods across our oceans. And then, just when you think you have them figured out, you see this. They're also in what they call the lifestyle segment. For example, they're a huge investor in IHH Healthcare, which just happens to be the largest group of private hospitals in all of Asia. I mean, think about that. One part of their business is digging iron ore out of the ground, and another is connected to our personal health. That is some serious diversity. Yet their own slogan, 360-degree business innovation, really starts to make sense when you see this. This is their core strength. Because they're in so many different unrelated businesses all over the world, they've built this incredibly stable foundation. If one area, say metals, is having a tough year, another area like healthcare might be booming. That diversification is a really powerful advantage.
All right, we're on the home stretch. We've seen their grades from the past, and we understand their strengths in the present. So what's the final piece of the puzzle? Well, we've got to try to look into the future. We need to figure out where the company is planning to go, and believe it or not, the best way to do that is to just listen to what the people in charge are saying.
And what better way than to hear it straight from the CEO himself? This quote from Kenichi Hori tells us a lot. He's basically laying out a two-part plan. He's saying they're going to take their profits and split them. One part gets reinvested back into the company to fuel future growth, and the other part gets returned to the investors, the shareholders. That kind of balance is often a great sign of a mature, thoughtful strategy.
So where are they actually placing those bets for the future? Well, their reports lay out their game plan pretty clearly. They're zeroing in on three big areas. First is industrial business solutions, which is all about making global supply chains smarter.
Second is global energy transition, so investing in cleaner energy and new fuels. And third is wellness ecosystem creation, which builds on those healthcare investments we saw earlier. This is their roadmap for what's next.
Okay, so let's quickly recap. We've traveled from the company's past performance to its current strengths, all the way to its plans for the future. We've done our detective work. So what's the big idea I want you to walk away with?
It's this simple 3-step playbook. 1. Check the report card. Are they making money? 2. Find their strengths. What's their secret sauce? And 3. Read the future. What's the game plan? That's it. This is a framework you can use for any company you're curious about, and it'll give you a fantastic starting point. So after our whirlwind investigation of Mitsui Co., I turn the question over to you. How would you evaluate this company? See, the whole point of this was never to give you the answer. It was to give you the right questions to ask. Because being a good investor isn't about already knowing everything. It's about having the curiosity and the tools to find out for yourself. So the real question is, what are you going to investigate next?